Good morning, Jags. This is Fahad. Today is Monday, December 21st. Let's get started. So we're going to have a pretty broad market sell-off in the market today. So if you look at the S&P futures, they're down 2 percentage point or 72 points. And if you look at when bulk of this sell-off is started, you would notice it was really after the European markets opened. Right after 3 o'clock Eastern time, actually 4 o'clock Eastern time after the time change. So you can see as soon as like within minutes after the European markets opened, that's when the future slipped off sharply. And then if you look at NASDAQ, you'll see exactly the same reaction there. And then you look at Russell 2000 index, you'll see there as well, even crude oil, same exact thing. Now, multiple reasons for this, but people will point to different directions. But I believe that bulk of this has to do with the United Kingdom news coming out over the weekend that they have found a new strain of coronavirus, which has led to a whole bunch of countries cutting off their travel with UK. At least 6 countries, last time I checked, had already cut off completely UK from any kind of travel. And the United States has not done that yet, but it's most likely to happen pretty soon as well, I have a feeling. All right, so that's what started this meltdown in Europe, and then that carried into the United States. But I would like to point out a few things. First of all, Russell 2000 index is the one that's taking the biggest hit this morning. It's down 3.1%, the futures that are, versus NASDAQ down only 1.2%, to more than twice the underperformance in Russell. So that means there's going to be a lot of destruction in value sector today, and growth is going to hold rather pretty strong. In fact, what we have been noticing for the past 2 to 3 days is actually last week as well, we noticed that growth was relatively starting to actually perform better than value. So for example, we were seeing breakouts in Shopify. We were seeing Amazon price action was starting to improve a little bit. We saw Apple was starting to act better than some of the others. So if there is going to be a buying today in the market, after market opens, if there's going to be any kind of buying that comes in, I would expect NASDAQ to actually provide the leadership, while Russell will continue to be very, very weak. So that's the first thing that you need to keep in mind. If you're going to place a bet anywhere, you want to watch a potential reversal in QQQ. So QQQ is going to open down sharply by about $5 or $6 to the downside. But let's see if this is the one that's going to provide a potential buying in the middle of the day versus looking at anything else. That's the first thing. Second thing is that the weakest part of the market is going to be the travel stocks. So you're already seeing, because that makes sense if everything is in UK is going into lockdown into fears of coronavirus. So Marriott is going to be one of the weakest one. If you want to make if you're going to press any bearish bets anywhere, that would have to be in the travel sector, right? So we could see selling actually accelerate to the downside in some of the travel stocks. So Marriott, which has gone sharply, MACD is rolling over. There's a still big, large gap that remains to be filled down to 105 level. I could see this close at 128 on Friday. I could see this could come in a few percentage points, or maybe as much as 5 to 10 percentage points. Similarly, Hilton is another hotel chain, and you can just go down the list. Hyatt is another one, and you can, also in the cruise ship sector, the airline sector, and all of them. In fact, Boeing is already down more than 5% in pre-market. So this would be the weakest part of the market today, if somebody wants to press the bearish bets into the group to the downside. On the positive side, we have a big winner in our hand, which is Goldman Sachs. Interestingly, while the S&P futures are all down, right now Dow futures are down more than 480 points. We're looking at a 500-point down day already in the futures right now. Goldman Sachs closed at $242 on Friday. It's trading at $249. It's up very nicely, about 3% in pre-market. Now, as a reminder, that's a very good news for the trade that we recommended in webinar 2 weeks ago. This is the actual snapshot in which we recommended buying Goldman Sachs January 240 to 255 call spread for $5 or less. This call spread is going to double this morning. And so I would be taking profits into this one. Now, at that point, what was not on my radar when I presented a bull case, and you can see on the very first line over here, I said that I am changing my stance on financial sector now, which I have avoided all year. There's a three-part bull case over here. And then I presented that three-part bull case over here, including the 10-2 yield spread, which is rising, which is, you can see the chart below. And then similarly, in the past 6 months, banks have over-reserved significantly for loan losses, which will start to reverse in 2021. That's going to be a very big boost for their PNL. And then also the unemployment picture, I don't believe is going to get any worse from here. It's going to likely get better, which means there's an incentive for these banks going forward from now on to start loosening credit again. So for those reasons, I believe that banks are actually going to outperform. That's exactly what we are seeing, because on Friday, after market close, they all got the approval from the Federal Reserve to announce large share buybacks because they passed the second round of stress tests. So Goldman Sachs is up 3% in pre-market. JP Morgan is announcing a massive buyback. And as a result, this stock is up also 4% in pre-market. Citigroup is up in pre-market. Wells Fargo is up in pre-market. So the entire financial sector is going to be powering higher very nicely in pre-market. So that's going to be the bright spot. And so I'll be taking profits in that one. And now with all of this said, I'm going to touch on one stock real quick, and then I'll pass the torch. And that stock is Nike, because there's some read-throughs from here. Nike reported earnings on Friday after market close. This stock is going to gap higher by more than 6%. The company reported an absolutely fantastic quarters with revenue increasing by 8.9%, way ahead of a street estimate of only 2.4% growth. And the entire growth was driven by outsized growth on its online business, which grew by 100% year over year, driven by women, fashion and apparel and such. Demand creation averaged 200 basis points, which helped offset $135 million of non-recurring realignment costs related to COVID. But even with that, the company raised its fiscal year 2021 EPS guidance to $2.95 versus $2.70 estimate. And the thing that I found the most interesting over here was that the Greater China sales for Nike were up 24% year over year, driven by strong demand on the Singles Day, which drove $500 million of digital demand and 4 million new active members. I don't know how many people know this, but Nike digital sales have led to total amount of new members that exclusively now shop online, have created their accounts with Nike, and such that they're on different kinds of plans as well, has now reached 70 million globally. This is an absolute record. This is very, very good, and it creates tremendous amount of tailwind to profit in the future in 2021 as well. Very differentiated story and very aggressive earnings report the way we saw, especially with the kind of growth rate we saw in women's apparel, all digital. Now, the read-through from these are very, very positive for Skechers. Some of the partners companies that the company works with include Skechers, Foot Locker, Dick's Sporting Goods, Hibbett Sports, and ASO. ASO is the Academy Sports and Outdoors. All of these should be, the read-through from Nike for all of these companies is quite positive. So this is a group where I'm going to see, where I'll be watching closely if they make any kind of red to green reversal after the market opens. So Skechers is looking to open down about 2%. But I want to see if this thing is going to make a red to green reversal. And if so, I expect this stock to quickly run towards $39 per share. Similarly with Foot Locker, this thing was already down substantially on Friday, and it's going to open down again slightly, and it's now coming up to a small or significant support around $37 per share. I want to see if this thing is going to make a red to green reversal. So I'll be looking for some green shoots here, see if we see the reversal for banks. I'm going to be taking profits in a call spread for airlines and all the travel stocks such as Marriott and Hilton. I'm going to see if we can press some bearish bets in those sectors. And then lastly, just watch QQQ. See if QQQ will provide the leadership while value sells off sharply. That's it from me. Jay.
Morning, everyone. So today, I just want to give a overview of one of the names I covered in yesterday's weekend research, and that would be NeoGames. Ticker is NGMS. This is a global provider of online lottery solutions and a pure play in the high growth iLottery market. Now, look, I touch on the company as a whole, talk about the industry in general, but just a few quick points. Right now, the company has full service contracts with only 4 states here in the US. That would be Michigan, North Carolina, Virginia, New Hampshire, 1 province up in Canada, and 1 in the Czech Republic. The reason why I decided to take a closer look at this name was because on Thursday night, Pollard Banknote, which is their JV partner, they announced that they received a 4-year extension with the Michigan Lottery to continue providing iLottery services. The new contract expires in July of 2026, and at the time, the current contract was set to expire in July of 2022. And really, if you look at the S1 filing, if you look at analyst notes, one of the headwinds or the risks going forward was what's going to happen with this Michigan contract, because Michigan is NeoGames' largest customer. They accounted for 40% of revenue in 2019 and then 56% of revenue as of September 30th. And Michigan has been a solid growth driver for the company. Since 2015, iLottery GGR generated by instant game sales in Michigan has grown at a CAGR of almost 64%, rising from 19 million to 219 million over the past 5 years. So now that headwind is sort of out of the way, we don't have to worry about that. The next potential catalyst would be more US states, adopting iLottery. Stifel believes there is, of course, significant upside to this. They believe there could be 30 to 35 states that pass legislation within the next 5 to 10 years. Truist, meanwhile, points to Ohio. They currently have a request for a proposal for iLottery. And so we could see something in the near term there. Additionally, Massachusetts, Arkansas, Missouri, Maryland, Indiana are some other states to keep an eye on. So while everyone is focused on sports betting, whether that be through DraftKings or Bally's or Fubo TV, you have this iLottery growth segment that I think people should be paying more attention to.
Did you say only 4 states currently have a partnership with them?
Right. So the company has right now a full service contract with only 4 states here in the US.
I'm reading 42.5 million active players accounts with the company. I'm assuming the active players account, these people are recurring. They regularly buy iLottery right online. Mm-hmm. They have a total of 12 lottery customers. 4 of those are the US states, Michigan being one of them. And then I think the rest are international. There's a comment that comes from the recent partners and whatnot, and the CEO of Sazka Group, which is one of their customers, says, "We selected NeoGames for their superior platform, unsurpassed variety of games focused on lottery players' flexibility and can-do attitude. The existing experience is running online operations in regulated markets with tremendous amount of success." Very positive comments from these checks. Interesting company, a very small cap. I think this is only $600-some million company, $670 million in market cap that grew revenues by 46% year over year. We'll be watching this one closely. Tremendous amount of strength over here. Good stuff. Chronicle.
Good morning. Today I have some follow-up commentary on Personalis, symbol PSNL. It's currently one of our premium ideas from our Q4 outlook, and it's already unlocked for everybody. So in every quarterly outlook that we issue, including the one that's going to be released very soon, there's always a section near the beginning in which we highlight any of the previous quarter's top picks that we think are worth holding on to going into the following quarter, and this company, Personalis, would be one of them. So last week, BTIG was out with a note calling the company one of its top picks for 2021, funnily enough. Now, this note was focused on their on-time launch of their neoantigen capability on their next platform, specifically the launch of their systematic HLA epitope ranking pan algorithm, or SHERPA for short. So this is basically a machine learning based tool to identify and compartmentalize cancer neoantigens on the next platform, while also developing new biomarkers and novel personalized therapies. And what sets this capability apart is that it generates a presentation rank for each detected peptide via a combination of antigen processing and RNA abundance. Like, to put it simply, it helps to determine the likelihood of a specific neoantigen being presented and undergoing immunosurveillance. And if we recall back in November, this SHERPA algorithm was shown to outperform all the other current neoantigens on market that are used to bind prediction tools in clinical tumor samples, including silico methods. And in terms of what I think will be a major potential catalyst going forward, BTIG analyst Mark Massaro, he's also pointed out that this SHERPA solution also has use in additional modalities in rare diseases outside of cancer. So, like, for example, it's now being used in Sarepta Therapeutics for precision gene therapy for rare diseases. So this aspect of SHERPA might not be fully priced in at the moment. And then outside of this note, just wanted to remind everyone again that the company is planning to launch their patient-specific liquid biopsy assay in 2021. This is something we already pointed out in the last Outlook. And then finally, another thing we also talked about is that Personalis is currently building a lab in China in conjunction with Berry Genomics. They're expecting revenues from that project to begin coming in next year. And so looking ahead, these are the two things that have yet to fully play out. So, which is why we remain long.
Very good update over here, but I would also like to add real quick, in essence, just to keep it simple so that the readers actually understand what this company is about. It's all about understanding the biology of cells. And this is what we discussed in our Jaguar fourth quarter outlook when we made this a top pick, and the stock ended up running by 80% in a single quarter. If you're trying to understand the biology of the tumor, which is often the goal of pharmaceutical companies, then it's important to be able to see all the biology, not just the biology that we have known about for decades. Think about this when you consider buying PSNL stock. The next platform the company has, NEXT platform, is basically becoming a new gold standard how to dissect the biology of these tumors down to each cell, essentially. Now, Personalis charges $4,000 per sample, and ultimately, if this becomes a fully adopted platform into major pharmaceutical research, you can see that the numbers basically from there go ridiculously higher. One of the catalysts that I had pointed out in the fourth quarter outlook, which I believe still has to happen, and is going to be a major positive for the company in 2021, is that in the earnings call on August 6th, the CEO stated, I quote, "I'd like to give you an update on another pipeline product. As many of you know, we have been working for over 3 years on a combined laboratory and informatics project to advance our neoantigen characterization capabilities. We believe that neoantigens are the crucial centerpiece of the new generation of companion diagnostic biomarkers. We expect biopharma customers will apply this capability to mainstream cancer drugs, such as checkpoint inhibitors, and also to experimental personalized cancer therapies, which explicitly target neoantigens." End quote. And then in a later on, they also said in the earnings call, our data shows that this project has achieved a leapfrog advance in this field. We expect to launch this capability as part of the next platform in the fourth quarter of 2020. So either it has already happened or it's about to happen. And this is one of the key reasons why this stock has been so strong. And also, by the way, I will tell you that there's a large VA contract, Department of Veteran Affairs contract, which is also expected sometime. VA has been already using their products since September 2019. That's when the company received the reward. But then they were originally testing this to only 30-some thousand samples, and then they increased that sample size to 116,000. But now the total addressable market size just from VA for the company is estimated to be 825,000 samples. Once again, for each sample, this company charges $4,000. So you can do the math. That VA contract alone could be as much as 5 to 6 times bigger than what it was when we made this a topic. That's also a catalyst still for 2021. So all of this adds to in a very important update that Chronicle just provided. And I wouldn't be surprised at all that despite after this stellar run, that this is still a big winner well into 2021. And this happens quite often with some of our top picks because we present a view, we make it a topic for the quarter, but they keep on running for a prolonged period of time. And this will probably be the case with Personalis as well, because the story is just so powerful and full of catalysts. Thank you very much for joining. Incredible update on PSNL here. Thank you. And Jax, we'll see you in the chat room shortly.